Why don't we get started? I'm Tim Massid, and I am a research fellow at the Kennedy School. I'm also the director of a new project we've started called the Digital Assets Policy Project, which seeks to organize activities around the innovation that's going on in digital technologies and also get the Kennedy School more involved in the policy discussions going on in the space. So we've just started that. And I'll do one bit of advertising, which is we have an event next Tuesday at the same time with Jay Clayton, the former chairman of the Securities and Exchange Commission, to talk about crypto regulation. So today it is my great pleasure to welcome Dr. Pramod Varma. I'm just so pleased that you could join us today. Dr. Varma was the chief architect of Aadhar, which is India's digital identity program, and also the chief architect for other components of what is called India's digital stack, including the Unified Payment Interface, or UPI. And what India has achieved over the last 15 years in terms of financial inclusion and instant payments is really nothing short of revolutionary. The Aadhar system has issued 1.3 billion biometric identity numbers. UPI is now processing over 8 billion transactions a month. And, 15 years ago, the penetration of the banking sector, I understand, was less than 20% of the population. Now it's over 80%. Now, that's important to hear that story, not only because India is the second largest country in the world, and estimates were it would take decades for it to achieve this kind of progress. But consider for a moment, the picture in the US. Slightly more than 5% of US households don't have a bank account. But another 17% are what we call underbanked, meaning the household has a bank account, but they use non-bank services like check cashing or payday lenders at a very high cost because they find banks either too slow, too expensive, or they don't trust them. And those numbers are from the FDIC. Most of us think of our payment system as working just fine, right? We have credit cards, we have mobile banking, we have apps like Venmo and Apple Pay. But if you live paycheck to paycheck, and it takes a couple of days for the bank to clear your paycheck, then you can't pay your bills without incurring a bank overdraft fee. And that is why many people use check cashing services, often at a cost of 10%. So I think we have a lot to learn, not only in terms of what's so wonderful in terms of what's happening in India, but potentially lessons for our own country. Dr. Varma is currently the CTO of the X-Step Foundation, a not-for-profit which creates learner-centric digital public goods to provide learning opportunities to millions of children and teachers in India and other countries. And he's involved in a variety of other digital public infrastructure initiatives and technology projects. He holds a master's and PhD degree in computer science and another master's in applied mathematics. So without further ado, please join me in welcoming Dr. Pramod Varma.
Thank you, Tim. It's absolute pleasure to be here. And I was just swinging by to go to DC, and I think Sarthak introduced me to Professor Tim and said, "Why don't you come over and talk about?" Then he wrote to me, Professor Theron wrote to me and said, "I'm going to be in because I'm doing some work on that, and I want to be listening into it." This is my colleague Kamya. She's also here. We both have a new Center for Digital Public Infrastructure, so where I co-chair, and she's there as well. So wonderful to be here. And today I'm going to take a little bit of time talking about India's digital journey, especially with respect to financial inclusion. But I think there is something different in the way India approached the journey. I think that difference is what I'm hoping to highlight to you and may be very, very useful for you to think about as you think about how economies transform itself and create reasonable equity in participation, especially with respect to SMEs and citizens. So it's not the numbers itself, because we are a large country. We are 1.4 billion people. So obviously we have numbers. We are very large and complex and diverse. So we have numbers. But I think it's a approach. The approach of what we have done to create fair competition. So we have like a 80 Venmos on steroids, right? All interoperable. So interoperability was very, very key for us. And so instead of one Venmo, we have many Venmos interoperating. And we get, as a population, we get choice, we get regulator gets comfort that its interoperable systems are better for fair competition. So I think there is a nuanced the way of thinking, what we call digital public infrastructure, that we hope to convey today. And he said, I can talk as long as I want, but I suppose I probably talk for 40 minutes or so and then open up. I'm really hoping that you'll have tons of questions for us, and whatever I can answer, I'll happy to answer. Questions are always interesting. So for the people uninitiated, India is really large, and we are the most populous nation as of last month, I think. Nobody counts people anyway, but it's 1.4 billion people. We are 22 official languages, so we are a continent in that sense, held under the same constitution. But we actually speak several hundred active languages. From the city where I come from, Bangalore, or Bengaluru, as it's called now, we speak about 109 active languages right in the city. So you can see the diversity and scale playing out, which creates a lot of complexity in terms of addressing large-scale problems, right? But we are very connected, and we have internet users in the last 10 years, literally grew from nothing to 800 million internet users and smartphone users. And the last number is very key. We only 6% of them pay income tax. That's really small for the large population. Everyone pays commercial tax. We have a unified tax structure in the country. So unlike here, sales tax in Massachusetts, state-wise taxes, we have a unified tax system called GST, Goods and Services Tax, common across the country, which everyone pays, right? Yeah. This is important to understand the background by when we began the journey of digital infrastructure. In 2008, we were less than 20% bank penetration, roughly about 17, I think, percentage. 80% of the country did not bank at all. That's a very, very large population. Mostly driven out of common reasons that you can imagine. Especially post the 9/11, the KYC norms, the Know Your Customer, and the Money Laundering Act enforced a lot more rigor in the system. And by then, 2009 collapse had happened. So I think banking systems were getting stricter, tougher and stricter in many good reasons, I suppose. But at the same time, that it basically meant exclusion. People just couldn't get into the formal systems at all. And banks, we have 600,000 villages in the country. So opening bank branches across India is just completely unreasonable and unviable business point of view. There's no way they can open that kind of branches. And connectivity in 2008, we were very poor in connectivity. Although the smartphones had launched by then, India was lagging behind very, very much. Very interestingly, India is also highly socialist sort of nation. We provide a lot of social benefit programs to the poor. And as you can see, a very large percentage of India depends on the government subsidies of women, girl scholarships, food security programs, fertilizer for farmers, subsidized goods and for the farmers and so on. In 2008, we were spending 50 billion US dollars. Now it's about 100, I think it reached 100 billion, a quite large amount out of the exchequer goes to the benefits of the people. But imagine the government was giving 50 billion US dollars to people who had no identity and who had no bank accounts. So it was as good as, hoping that it does reach the right people. And it wasn't reaching the people. The middlemen, were thriving because they were bridging the information asymmetry and everything, all asymmetry between the people and the government. And it was estimated that 20 to 40% out of 50 billion US dollars was leaking out. Probably even more. Okay, this is conservative estimate. Many reasons. Nobody knew people who are getting actual entitlements. People were dishing out cash in such large population, large cash disbursement, which never works out because the power asymmetry is very high. Poor people and the officers who give, they would say, I won't give it to you today. Why don't you come home tomorrow? And power is so high that it's impossible to get money out of them. This is the report, based out of the report from Bureau of International Settlements, BIS, in Basel, that studied India's financial bank penetration drive. And they said India would take about 5 decades, if you plot the GDP curve, to go from under 20% bank penetration to 80%, which is a reasonable number. 80% beyond that is a good number to reach. It's a good dream to have. And we would, if you do nothing unusual, we would have taken 5 decades. So that would have been 2060. We would have, reached people. But India really took less than a decade. That was such a crazy non-linear or exponential change that they saw in the country, and they were studying further to see what really caused it. I think this is the story of our digital public infrastructure. When you build reusable building blocks, it creates ripple effects. The domino effect of that is so high that all linear mental models go out of the whack if you do it right. And if you get it right, you can see magic like this. And it was amazing. We opened 480 million plus million bank accounts, literally paperless process, instant bank account opening to people. And currently it's about 900 million people have bank accounts. So it's very, very, very high. And during the same decade, I was telling you 50 billion US dollars was being spent on cash subsidies and so on. And India became the world's largest, what's called a direct benefits program infrastructure, DBT, direct benefits transfer infrastructure. About thousands programs, as we call schemes, federal schemes and state schemes, which is benefit schemes for pregnant women, girl scholarship, pensions, scholarships, various fertilizer, cooking gas subsidies, and so on. They were all converted to direct benefits transfer. They were starting to send money directly to the bank account of the beneficiary, because now they know who the beneficiary is, because everyone has a digital identity. Now we have made sure everybody has a bank account. Government said, I could just cut the middleman, straight go to the people. And that was very attractive for political parties as well, because now you can say, I got your money, right? Directly. So it sort of aligned in every sense that it worked out. From the bureaucracy, it was a great efficiency gain. For politicians, it was a great vote gain. And for innovators, it was fantastic, because this triggered a ripple effect in the fintech industry. And that's beyond what's imaginable. Private industry, private innovators innovating, because so many people came onto the formal system in a paperless, presence-less, sort of low-cost fashion. They're all addressable market suddenly for a fintech company, right? So it is a very, very powerful transformation. Today, we have about 860 million people who can receive money directly with a financial address. So it's a very, very powerful. It's like an email address, right? You can actually send money to 860 million people. And cost of sending money in India is 1/700th of a dollar. It is nearly cheap. It's as cheap as sending a message on WhatsApp. Because we believe communication, money movement should be such public utility that then only you can create economic benefits on top of that. You can charge for value adds on top of it, but taking your money and giving it to somebody else should be as free as you can get. Last year, we ended up with a 322 billion US dollars transferred on people. And this is the interesting part. If governments to do ROIs, this is how we should do compute ROI. The identity project and the payment project, payment infrastructure, and the subsequent, the two other infrastructure I would talk about, put together, well, the government spent about $1.5 billion. That's what. 1.36 billion people have identity today, 896 billion bank with 1.5 billion investment. Just on the federal schemes alone, government saved $27 billion. Forget the state schemes and everything else, all the fintech, economic growth that we saw after that is not even computed. So we ask all of you to do more research. Okay, we are here also to, get more of you to study. How do you even tell this story? What is the economic impact story about this? Is not told yet. Not all of them are studied yet. Much to study in that the subsequent effect. But the beauty of this is that when a country creates a infrastructure, like a highway, digital highways and digital rails, it comes in handy as a matter of resilience to the country, right? When COVID, nobody expected COVID, and our India's first lockdown was extremely harsh on people, very, very hard lockdown we had. And we managed to spend, because moving money was cheap and it was free, and literally everybody had a bank account, everybody had addressable financial address. So government moved a lot of money on that pipe to make sure people have money so that there's no, backfiring and unrest, social unrest from the lockdown. And second, food. The two things that made sure everybody gets during the lockdown was food and money. Okay, everything else was locked down. So it was pretty bad scene there. And today, in 2023, we have more than 1 billion connections. Aadhar is our identity program. So Aadhar, meaning of Aadhar means foundation. So it was a foundational identity for everyone. 1.36 billion people have a digital identity in the country. 800 million internet users. By the way, we are by far the cheapest data plans in the world. Okay, and maybe there are a few countries better than us, but at scale. We are really, really cheap. So when we come here, we really feel bad that we have to pay so much for mobile data, right? Our like a driver who works with our company has a 1 GB a day, like cheap data plans. I don't know what they do with it, but maybe they all watch Indian movie songs or something, But nevertheless, we went from almost, such large-scale internet usage right now. It opens up opportunity. India is a very young country, by the way. Most of the 70+% of the India is actually below 35 years old. So it's a very young country, very aspirational. So all this works out really well for them. We have 81% accounts. The good thing about digitization also is that our tax systems are completely digital, completely. That commercial tax. That means every invoice, B2B invoice today are machine readable, digitally signed invoices that are being used for tax. So again, the power is that the businesses now can really make sure that their information collateral, in one sense, is starting to build up. Their digital footprints is starting to build up. We have 10 million companies verifiable, digitally verifiable companies and tax filings. So the essence of that transformation was to imagine not as solutioning, for the government does not or did not go about solving. This is very important to understand. Indian government did not go about solving things. Indian government said, no, we were going to invest in infrastructure thinking. What are the core building blocks at the bottom that can be democratized, that allows the private innovation, and both public and private innovation, to create cheaper, faster, low-cost, high-trust solutioning to a much larger population than traditionally they did. Most of the products and services were available to top 10% of the country, the top of the pyramid, as usual. The rest of the people were all in informal economy. So the real idea was to expand that pie and offer that, digitally, that massive consumer base to the innovators to say, now you can get them financial savings account management, saving 10 cents a day, kind of literally at a low cost, high trust manner, right? So imagining this as a digital infrastructure was the key, not digitization or digital solutioning. So we were not digitizing. We were not doing e-governments program, right? Traditional, what we call, let's go digitize, put an RFP and try to get a vendor, large system integrator, and try to digitize. No, this was not a system integrator play at all. This was about a set of core components that could come out that triggered the subsequent solutioning. And real the core of what we call a foundational elements of this was identity, payments, and data and credentialing. And I'll talk about these three as very, very foundational for a digital economy. A billion people participating in digital economy necessitates digital trust, digital identities, and the ability for them to say, I am who say I am in the digital realm. Whether I'm doing a business, whether I'm a driver, whether I'm a plumber, whether I'm a teacher, hospital student, I'm doing a telemedicine with a doctor. Everything is in the digital world. In the digital world, how do you establish strong identity and verify and trust each other? Not about government being in the middle. It's about individuals and SMEs being able to make sure that happens, make payments and make credential data. We'll talk about each of them. So the first one was the identity project that started the domino effect. This is the one which started in 2009 and it was launched in 2010. And within a span of 4 years, we got to 600 million identities. And within 7 years, we were 1 billion people in the digital identity system. The essence of that system is so simple. It literally, we are the only identity system in the world that captures only 4 attributes of a person. Just 4. Name, date of birth, gender, address. And most of them, that itself was hard because Indian addresses are very wacko. Most people don't even have proper addresses, right? In the sense you have like behind the temple, around the corner, somehow figure it out. Because most of the postal systems didn't need absolute addressing. They were always what's called late binding. The postman would show up and the last person somehow know the place, right? You just have to keep sending it to the right direction. Eventually it get delivered. But in that was not enough for a banking system because of the KYC norms necessitated some address management. So we had that, and we literally had 4 attributes, but the system was only offering 2 APIs, application programming interface, to the ecosystem, entire public-private ecosystem, 2 APIs. So this was not a ID card program. It was a digital identity program. So that's why it was entirely digital, extremely minimal. It captured no other attributes. It captured no location attributes. It captured no purpose of attributes. That means why you are using the ID. It didn't even know when you went into a hospital or went into a bank to open a bank account. The ID system didn't know that you were actually. So it was extremely privacy preserving to be so simple. But I think we believed the simplicity was the successful scale. Because if we had complicated anything more, we couldn't have reached so many people. Because the more we ask people to fill up the form, the less people get into the system. Because the more data they have to prove, the less chance they would join. It's very, very interesting. Because then you would end up giving the identity to the same people, same top 100 million people or 200 million people who already had ID. That was not the purpose, right? So it was very, very self-declarative as well. And we used biometric to deduplicate, the facial biometrics and fingerprint to deduplicate. And today we have 1.36 billion, and every month we do about 1 billion authentications, digital authentications. Then authentications are available offline and online. So it's fully, you can do a decentralized authentication or a centralized online authentication. Both are key for India. It's important to understand why we still have a centralized authentication. Not everyone has smartphones. We have about 400 million smartphones. We have about additional 300, 400 million people with feature phone. And we have additional 300 million people with no phones. So if you create identity only works for, like a digital wallet, decentralized ID, good stuff, that we create for smartphone, we have about 800 million people out of the system, straight. So we have to make sure the identity system was very inclusive. So we offered people who have smartphones, I can do completely decentralized authentication with the central system not knowing anything about it. So think of this like an ID credential that I can use anywhere. People who have feature phone can use it. People who have no phones can use it. So that's why we have quite large usage in the system. That was also the reason why we transferred the direct benefits transfer program. So India, on top of that, under the Reserve Bank of India, which is our central bank created an infrastructure, an open infrastructure for moving money to people. It was not done by ID system. It had nothing to do with the ID system in that sense, other than onboarding them to the banking system. But once you have a bank account, you had nothing to do with the ID system. You could actually participate in this system by signing up. It was a consented opt-in service, so you have to opt in for this. 860 million people have opted in today to people join. And what is the advantage of this? Is that 860 million people can get government subsidy on their ID number. So ID number become their financial address. That also meant that people who closed a bank account and open another bank account, it doesn't matter because ID would always reroute the money to the right bank account. So you get a bank account portability almost as a side effect, okay, of this, because your identity become your financial address, and I don't need to know which bank you bank with. I don't need to know at all. I can send 1,000 rupees to an identity. It was very powerful because it allowed government benefits to flow in without knowing who you bank with and where your bank account and all that thing. Pension, for example, people who pensioners have to get pension, and it doesn't matter where you are, right? But this was also an open loop infrastructure. This is very key. India always worked on interoperability. So we have 350 banks, all interoperable on this network. So any bank system to any bank, you can send money. So it's not a private solution. It was a pipe infrastructure rail that created 350 banks, real-time money movement, right? That's how we ended up creating for moving money from the government. We also created open specification as part of this because we realized this was the first time we were opening bank account. Think about it. We were less than 70% bank penetration. So if you bring people to the banking system and open a bank account, as he was saying, half the people don't even trust the bank system because I don't even know what it means to keep the money there. I'm used to cash, and I somehow feel cash is more safer, right? So first time people who are coming into a formal system to join, trust had to be established. Awareness has to be established. And with 109 languages, a few hundred languages, think about getting awareness campaign going in this country, right? It was very hard to say, it is safe in the banking system. You can actually keep, and the lady who works in our house, for example, although she grew up in our urban setup, she was urban poor in that sense, she didn't have a bank account. She opened bank account during this wave. And she's first time realized the bank gave her money back as an interest. She didn't know what that concept was because she's only used to giving money to somebody else. She said, oh, I didn't know it increased. My balance increased a little bit, right? Then we explained to her something called interest. If you put there, you can actually earn interest. I said, okay, that's pretty good. But the real challenge was that banks there was no bank branches in the village. So imagine opening 800 million bank accounts, putting money in the bank and saying, but you can't take the money out because you have to travel 50 kilometers or 60, 50, 60 kilometers to get the money. Every day, I miss my daily wage to go to the bank. Means I will lose my wage. So people used to say, forget it. Or some agent used to go to the bank with everybody's PIN and card and all that thing. And then used to collect money in suitcase and bring it back because I can't afford to go to the bank. Bank is so far away. And women can't go. Cultural reasons, a lot of other, they have to look after children. Many reasons they don't go that far. from the village. So it was very key for us from day one to design an ecosystem that allowed what's called micro ATMs. So we opened the Reserve Bank of India. Some of us worked with the Reserve Bank of India or central bank to create an open loop specification for something called a micro ATM. ATM A stands for not automated telemedicine. It was more assisted telemedicine there. And it with a device, biometric fingerprint device attached to this phone. And you would go home. My grandmother is 105, gets pension at her doorstep today because the India postman would show up and say, your money is come, and she can actually get the money out, literally at the doorstep. So what happened is because of this, we have a large private ecosystem who innovated on Android phones with devices, will get EMV-like certification. You know, the card guys have a certification for the programs, security certification, certified, and they sell these devices to the bank. And we have about 800,000 plus what's called a banking correspondents. They are agents of the bank who are typically local entrepreneurs or India Post, like US Post, that was the largest network penetrating these villages. The postman would have something like this, and you would come home, and actually you can do cash in, you can do cash out, and you can do money transfer. So this also created money transfer program for many Indian, lot of migrant workers. India economy is booming. So a lot of people move from their villages to urban location to work. When they work, they earn, but they don't live there. Their family lives somewhere else. So they have to send money. They used to send it to Western Union like private networks who used to move money with a large fee. Now they actually go at nearest shop and actually put their fingerprint and transfer money instantly to their spouses on the other side. So this is why it is allowing to, last month we did about 384 million transactions on this. So it was very, very largely used. Again, this idea here is that government did not try to solve everything. Remember, government or the central bank regulators are creating open specification and an ecosystem market making effort that allows entrepreneurs to step in and say, I can create devices, I can create apps, I can become a commissioned agent on the ground. There are large entrepreneurial system, people who are what's called social entrepreneurs who are actually who are local, who help out the people, who sign up as a correspondent of the bank to show up there. Because these are a very small scale money. Think about it. They are not transferring $100,000, right? They are transferring like $100, $50, even probably less during this. So it's not a high risk issue for them. This is the reason why we talked about this metrics before. This is why we got people open bank account. Everybody has a bank account now. Every government scheme was moving into direct benefits transfer. They were able to do cash in, cash out at the end. And that created a trust, that created transaction to flow through, and that created that large ripple effect that we created in the G2P. But this is only one story of government to person payments, G2P payments. At the same time, we also, as Tim was earlier mentioning, we also launched something for a unified payment infrastructure. Again, that interface, unified payment interface, was an open protocol specification. Why do I keep saying protocol specification? Because think like GSM. The reason why I can take Android phone connected to a telecom network in India and call your number, you may be on an iPhone, on an AT&T or Verizon here, I can speak. It's not because they sat together in the room and said bilateral conversation. There was an underlying open network with regulatory rules of that highway, GSM being the protocol, and the rules of the game for interconnectivity being created by the alliance, and saying, let the private innovation now create that network. Same reason why internet works. Exactly the same reason why internet is a decentralized large-scale network driven out of HTTP and HTML being the underlying standards out of W3C right here came about that created this ripple effect. So we looked at payment and we said payment should not be thought of as a solution or an app. What is the SMTP or HTTP equivalent of payment? If SMTP can move email, I should be able to move money from any stored value to any stored value. So we created what's called a unified payment interface. It's an open protocol that created the protocol, then brought the banks onto it. I'll talk about that. And the same protocol is the reason why that protocol was agnostic to devices. It did not assume it's only on smartphone. It did not assume you were using a PIN as an authentication or some other authentication. It was authentication factor agnostic, currency agnostic, device agnostic protocol. Why is it important? As an architect, when we did this, we were realizing that devices will come, newer devices will come, newer form of authentication will come, like a Face ID here, right? So you will have to accommodate that evolving innovation on top of this and allow still money transfer to happen. Which is why the same protocol is used by people with smartphones and people with feature phone and people with no phone. Exactly same rails are used for moving money. And we launched this in 2016. And in 2023, last month, we ended up with 8.7 billion transactions a month in a short span of 6 years. Again, it was not because we tried to create one app, not because some two banks came about. We created such a low-level underlying open protocol for an incentivize every bank to join. We are able to actually scale. And this is also the reason where now we are adding this year, expect us to add a full-fledged Indic language voice-based money transaction. Protocol is not changing. It's the same protocol, but the interface is changing. Instead of touch-based smartphone interface, I can do a voice-based interface. And if I can do that in my local language, more people can join to participate, send money, right? And this is why unified payment interface, we have about 350 banks and wallets, all interconnected on this interoperable underlying network with 60 plus apps. So we have no one Venmo, we have many Venmos. We have 3 of them dominating. You can say PhonePe, Paytm, PhonePe first, Paytm next, and Google Pay third. That's how they are dominating right now. And we have WhatsApp Pay, we have Amazon Pay, we have lots of companies. I don't know why they all end up with a pay at the end, but anyway, I suppose some naming convention. Techies couldn't find anything else, I think. But it's amazing that India last year, not 2022, 2021, I think we ended up with more than China plus UK plus US, all put together, real-time payments. Last year, we must have blown past way to quite high, because 8 billion transactions a month is a lot. So that's about 100 billion transactions a year, right? So, and we are still growing. The growth is expected to taper around 1 billion transactions a day. That's what we expect. And it's so lightweight on the network. It's a very fully decentralized. That means any app to any bank to any merchant to any consumer, all interoperable. That's the real power of interoperable. I can't stress how much, if you think about that, literally the UPI protocol was just 2 pages. 2 pages. That if you can distill your design into that 2 pages and create ecosystem incentives on top of that to sort of trigger the effect, you would see a non-linear effect like this, right? Not to try solving all by yourself. Because we cannot solve. We need to let entrepreneurs solve. But entrepreneurs can't solve it in silos at scale, right? Then we said, one of the things we did, when we give identity and when we give payments and when we start digitizing the society, the ripple effect of that, the side effect of that digitization is that lots of data. The digitization triggers the amount of digital footprints that individuals and SMEs will leave behind is so high that we had to have a conversation about it. Who owns the data? Should government own data? Bad idea. Should private companies keep all their data? Probably bad idea. So like GDPR, we sort of made the call in India as well that individuals will have the right to own their own data and SMEs will right to own their data. So it's part of the data protection thing, and now we are, implementing. Unlike GDPR, though, unlike GDPR, it is not just not retaining at the law. Because in just putting a law in India is not. We have enough of them. We not necessarily follow them. So it's important that we also create a techno-legal framework. So we have a absolutely different. This is something very unique in the world, and a lot of them are studying. At least we have 6 countries around the world: Australia, Japan, France, and so on, collaborating with India to create similar individual data ownership regime, where I own the data and I get to consent and I get to share however I want. So this is very important part of the design, is that there's no central system at all. And the beauty of this, there are 2 things we did with data. One is convert digital certificates and digital documents into verifiable credentials. Again, much of verifiable credential work is coming out of W3C in MIT. So verifiable credentials is a huge thing, because why is it important? Why is that an individual not able to save in a mutual fund millions of people who can't get into the formal system? Or why can't they get a lending offer? Is most of the time you realize the cost of trust is so high that if you show paperwork that your degree certificate or your monthly earnings or bill payment, none of them is verifiable. So the bank as a lender would say, who is going to verify all these documents? To verify to do what? I can't give you a $10 or a $50 loan using this, because my cost of verification and cost of processing the loan is so high that I would rather deal with few people who's asking for large amount of money, but we have to reverse it. We need lots of people asking small amount of money. So it was very key for us to create a high trust, low cost system, not other way around. And credentialing was very, very key. So we created something called DigiLocker. It's a national credential sharing infrastructure where degree certificate, education certificates, tax certificates, ID documents, I can as an individual. So when we walk into airports, we actually show our DigiLocker. We don't show our vaccine certificates are all digital, as you probably know, unlike here. So it's everything we made it verifiable so that they can use that as an economic asset to prove they're good, they have a high rating, they are vaccinated, they have a balance in the bank account, and so on, to whoever they need to prove to. Because most of the time that proof is very, very hard to come by. So this was, again, a fully decentralized system, hundreds and hundreds of issuers of credential and hundreds of users. So if you have education credentials, you can use that anywhere else. We don't talk about particular technology like crypto, blockchain, and all that thing, because we believe, as a technologies, I believe the technologies are how you will end up implementing. Is most of the time what you want to implement is much more important. Why and what is very much the architectural choices that you will make. And when it comes to how, yeah, you can use with a blockchain behind the scene. By the way, blockchain is quite compatible. So a few of the DigiLocker implementation entrepreneurs use a blockchain to store their credential, for example. We have no issues either way as tech come by. This is even bigger. Why only credentials? Why not all your footprints, digital footprints? It's like GDPR. If you can own your data, then you should have a mechanism to access your data without centralization. So we don't want any data centralization whatsoever. So imagine you have data lying in your bank, dying in your hospital, dying in your employers, in your academic institutions, because you interact with these systems every day, and you start digitally interacting with this system, you leave digital footprints in those systems. Imagine that data can be accessed by the individual and then shared with your consent if you wish to do so for a You are applying for an admission, you're applying for a loan, you're applying for passport or visa, and you want to be able to share your documents, right? And for that purpose. And account aggregator is the name of the network, which is a shared financial data network. So through account aggregator, individuals in India or SMEs in India can access their bank statements, mutual fund statements, insurance statements, and so on, and tax data, all individually can access. So we have multiple account aggregator who acts as consent managers. Actually, this consent manager, you can sign up with any of them. It's just an app. The consent managers give you an app. You can just sign up with any of them. And you can actually ask for consent you can issue a consent, digitally signed consent. And then their consent travels to the data you are trying to access, like a bank statement. And that gets shared directly. So it's a peer-to-peer network. It's a peer-to-peer network that allows you to be in the middle of the data flow and only to be in the middle. And this was very, very key, because without this, all data would have been locked in to some large systems, either large banks or large government systems or large big tech guys, and it would have just got locked in. And it was something which we wanted to make sure that individuals have access to it. You can download yourself as well. And the real biggest transformation that is triggering is in the case of lending. Lending was the biggest, where Indians, most of the traditional lending is offered based on some sort of collateral. And we all take it for granted that we all have some assets, some physical asset that we can collateralize, like a house or a car, or then you can actually give against which you can get a mortgage. Most Indians don't have any physical assets. This is very important. Billion people don't have digital assets to pledge, so they have nothing to pledge. So either you leave them to complete informal money lender, local money lender who just crazy loans, interest charge they would charge, or you try to formalize the economy. To formalize, we were converting their information as a collateral. What if Indians can use their digital footprints to prove I'm a good driver, in Uber I have a good rating, I have a reasonable bank balance, I pay my bills, I pay my income tax, can I get a tiny loan? Repay that, and that creates further footprints, and use that to create best behavior in the system. And I use data as my asset for my economic progress. And that's why it is triggering. And today, India is already disbursing $2 loans. $2. We can actually disburse instantly on a network, fully digital, no paperwork whatsoever. So it's very, very important to understand, when you collapse the cost of customer acquisition, collapse the cost of trust and cost of processing, much larger people can be addressed. Suddenly, addressable market gets much higher for the private innovator ecosystem. So we have lots of regulated under the Reserve Bank of India Central Bank lenders, money, what you call fintech, micro lending apps, and so on. They're all able to now do this in a regulated way, in a well-controlled manner, but using your data as the collateral, SMEs data as the collateral. Currently, mostly limited to SMEs, not yet for individuals, but that's a huge starting point for us. And that's why today we have our account aggregator, which is our open financial data network, has grown from nothing to 1.13 billion people who are actually able to leverage their bank statement. So Indians, very, very different. We've gone fully digital in that sense, right? Our bank statements, everything is machine readable, digitally signed, accessible to me, and I can really use that to process my next step in my thing, right? But what is very key, and I want to switch one thing before I sort of wind it up, is that imagine you gave identity to everyone, you gave bank accounts to everyone, now they're starting to make payments, and the digital footprints are starting to emerge. But eventually, it's about business opportunity, economic opportunity for them. So if I'm a gig worker, like a TaskRabbit, if I work in, I'm a gig worker who helping in TaskRabbit, or I am a tiny homestay tied to Airbnb, or a driver who works in Uber, a lot of these have It's about opening up the market vector, right? That's what these platforms do. These platforms allow me to digitally access a market that otherwise I couldn't access. And that opening up the market was very key. But the side effect of that was that we were also watching the two-sided market sort of monopolies to emerge. And India monopolization was a big issue because we are very large, and even Amazon has not crossed 10% commerce. So we still have 90% B2C, and Uber is at 1 or 2% of the mobility space. So 98% of the mobility is unstructured, informal, public transport, public buses, metros. It's very much fragmented. Taxi is very little, okay, by the way. But even though we were very, very sure that as the market, how do we get every SME and every individual open market access and equitable market access? And that's where we started working on something called a beacon protocol. This is an open source. All these are open source efforts, by the way, with global community working behind it. Beacon protocol was the effort to actually create, what if we can create a semantic protocol for commerce? What does it do? It creates a network like this. And we launched our first network last year called Open Network for Digital Commerce. It's basically, it's a grid. Think of this like an electricity grid. And if I'm a small business, I can hook myself up to this grid, and I can actually see people can discover me, people can book services and products with me, and I can ship it without me having to run the whole Amazon like vertical stack. So it's a very, very much a very internet of commerce. Think of that way. That's how you want to imagine. Hard to imagine for most people, okay, by the way. And we have spent a lot of time with Microsoft, Google. They're all there. They're all participating in the networked growth. We have probably 2 networks even in EU that's going to start off using this. But the real idea was to open up the commerce network, and where delivery companies, selling goods companies, consumers are all can use different apps and different platforms, but they all connect to the same grid. So think of interoperability for commerce. That's what we are doing. The network itself has no systems. It is completely driven out of like a GSM protocol. So think of that way. There is no central system. Okay, there is no central database. There is no central system. There are many, many, many systems actually connected. So it's a very forward-looking, somewhat crazy idea. And we are doing the same thing for mobility as well. By the way, India's 2 mobility networks, world's first. Mobility peer-to-peer. Permissionless peer-to-peer. We mean driver and me. There's no Uber or Lyft in the middle. Think about it. So it's very, very interesting construct. They have a lot of tiny, tiny, tiny apps, and I can discover them real time on the network and actually book. And they can bid what they want. And if I'm happy with it, I'll book it and I'll pay them directly. So it's a very, very interesting possibilities that emerge. And Paris and Amsterdam are looking at pilots as well, by the way, because they've had local issues with large companies like Uber, for example, and they were exploring more unified. And also they wanted to integrate metro, buses, public transport, all that thing into this. Now, because this network is open, it doesn't have to be only taxi drivers. And we have multiple types of modalities, transport modalities getting connected. So this is sort of the conclusion of this digital public infrastructure, right? So what way we digitizing? We were not building digital solutions. Point number 1. We were giving each of them a digital identity, that means you know who you are dealing with. You can prove who you are to a network in digital world. You can harness your own assets, which is what I have, which is in electronic data, electronic credentials, my data as an asset. And of course, converting property. If you have a small property, getting property records digitally verifiable. So what's called an asset layer. What I have, so that I can transact in what I do. So we are working on all 3 areas to create what's called a highways. What are the underlying open specifications for interoperability. All we care is about interoperability. If we create interoperability and drive innovation, we feel the market will solve. Market will solve at a much faster scale, like exactly what happened to internet. Internet opened up possibilities because of the interoperability of HTTP packets and HTML packets in the middle. But you could innovate it. But someone had to build that network, open network and open specifications. But I think we stopped doing post-90s. That's what happened most of the time. And we sort of left it to the market. And we are starting to build more layers on top of it. So if you really look at India's layer, it's these three layers. A very, very thin bottom layer called technology, protocols, and standards. Interoperable technology, protocols, and standards at the bottom. But laying the highway is not useful if your highway has no rules. So you have to have some rules of the game, which is the governance layer, whether it's a payment highway, who can join, who can transfer, who's the liability if you miss the payment, what's the accountability structure. You have to think about all that thing. So we have to have governance on top of the digital highways, but then you leave it to the market for innovation. Because if you don't involve market players, you will get a highly muted innovation. You can't get much innovation out of it because you'll have a government trying to solve everything, right? It never works out really well. And that's why we don't want to be on this end spectrum where government is trying to solve everything, which is really, really bad setup because it's slow innovation, just doesn't work, it's not sustainable. But we also don't want to be on the other spectrum, which is where US, in one sense, is traditionally beyond the internet. Internet, of course, all started here. But beyond that, it sort of went into the other extreme of lack of interoperability and lack of competition. Competition is a huge issue. And that's why I think can we create more balanced, equitable, using open specs, open specifications and protocols, and with the right set of governance, can we trigger more innovation on top of that is what India is trying to do. And so far what we have done, the numbers speak for themselves in one sense, what we are doing with data network, payment network, now commerce network, the three networks that we are enabling. And we seem to have some sort of a mechanism, but towards what? Only reason why India is doing is this. If we did not do this, even with the largest fintech and largest health tech in India, largest fintech was getting into about 20 million users. Credit cards were tapered at 22 million cards in India. We have 950 million adults. We have only 22 million people who had cards. And fintech people, we have under 50 million people who are doing digital payments. So it was about lack of access, right? It's not that they couldn't do. They couldn't grow anymore because the cost of growing was so high to get to that tiny fraction of transactions they can do. So laying the underlying infrastructure went from 50 million, less than 50 million people paying digital payments in 2010 to 500 million people doing digital payments, right? So we are able to actually grow the market, expand the pie, and let the innovators go beyond what they traditionally could go. This is why today fintechs have reached 200 million, 300 million from 20 million 10 years ago, because they just couldn't penetrate anymore, right? And so the idea was that we are doing a lot of that actually as part of the digital public infrastructure. We are also doing this across the world. We are helping. This is no more an Indian topic. You will hear this topic from many countries. Many countries are building digital public infrastructure. They're starting to realize the idea of digital building blocks that can spur economic transformation on top of that. And both of us belong to the center. It's a philanthropic effort. All the things we are doing are all open source and philanthropic efforts for us to be able to help other countries. So if you want to do research, if you want to participate, most welcome to participate with us. All right. Thank you so much. Yeah.
Pramod,
yes,
that was terrific. I have so many questions, but I'm sure other people do. But let me just try to make sure I grasp just how different this is from our system and also from alternatives like crypto. Our system today whether you're using your Venmo account or Apple Pay or writing a check or a credit card, it's all running through banks as the clearing and settlement
Yeah.
part, which are then tied to the Federal Reserve in terms of those institutions having accounts at the Federal Reserve to help with the settlement. Crypto comes along and says, oh, we've got an entirely new system, but it's token based, it's centralized, but really has a lot of stuff that you're not even concerned with about, oh, everybody can participate in validating what the transactions are and everybody can see the transactions. Yeah. You're not doing any of that. So I think you started out by saying, well, it's really like we have 80 Venmos on steroids. So it would be as if we said, our government said to the banks, Venmo, to Apple Pay, everybody, you've now all got to structure your system so that they are
any to any, yeah.
And individuals can have an account with any of you.
Absolutely.
Through this one identity number. That identity number gets them the account.
Yeah, correct.
Gets them the account, but the accounts are separate. And they can all transfer. And somehow the Fed doesn't have to be in the picture. Right?
Not at all.
I guess I want to make sure I understand why
exactly.
that is.
I think interoperability used to be an argument during internet days, and it stopped becoming an argument post facto here. And interoperability continued to be an argument for us. We said it's not about creating a parallel system. It's about creating interoperability among all of you. And all you need is a 2-pager protocol specification, literally. But someone has to have conviction. Someone has to push for it. I think probably you're having conversation. I think Fed now, for example, trying to have the conversation, trying to create that system. But action
it's as
yet
if,
to be seen.
It's as if the Fed said, we've got Fed now and all of you get access.
Yeah, and also it was not even mandated by the central bank. It was not even mandated. It was incentivized.
Oh, terrific presentation. You know, a little intimidating for us not living in India, that we haven't done nearly as well. But on this point of getting people along, so on the data aggregation, for example, you must be requiring every bank and every producer of this data to accept the interface.
Yeah.
So it's
yes, correct.
It's a mandate where it's
not yet, but it's a. So the legal mandate says you should give a copy of the data to the people. Now you can say, come to my website, download the data, right? Like the Google and Facebook and all today do. I can go to the banking website and I can download the data. They would still comply to the legal requirement by doing that. But opening up an interoperable interface is currently an incentive. But we believe there's an incentive because they want to expand their lending. Lend for banks, for example, to do that. They believe their services can now go to 10x more people that they traditionally can. So there is a win-win. By giving the data, I can also accept data from the other bank. So it's not only give and take. I'm not just giving, right? I'm my consumer. I'm also getting the data from the other bank when the consumer applies the loan offer to me.
But it's voluntary.
It's voluntary currently, yeah.
Deal that everyone does it. And on the prior stage of the UPI, to get that going.
Even UPI is voluntary.
It's voluntary.
Yeah, so no banks, even banks today can say, I'm not joining the UPI network. But their customer would say, screw you, I go to somewhere else. Yeah, because it's a formal issue, right? It's about doing what consumer wishes. So I think it's a consumer pushed sort of fear of missing out issue. First 2 years, it was very hard to convince the big banks. By the way, the 2 largest banks didn't join UPI network for 2 years. They, this is held off, saying we are not joining.
So how did you get over that first
hump? First 2 months, first 2 years was sort of hard. But the good thing, again, one of the good things Indian government, Indian regulator has done is that they were licensed on tap for banks, for example. So because of that number of smaller banks, hungrier banks that existed to say, I will make the move. Like there were Axis Bank and Yes Bank, there were smaller banks who would say, I can see the power of this. I'm going to make the move. I'm going to work with fintech companies to really supercharge this and start making the move, really creating pressure in one sense to say, why is you as my bank not offering me this feature? I can see these QR codes everywhere, and just because I have a bank account here, you are not letting me pay a merchant, one sense, right? So I think the pressure was really to get early adopters, never the incumbents. Incumbents probably wouldn't join. Almost always the nibblers, who are just right behind the big guys. We have to get them first. First of all, Google Pay was not the first mover. WhatsApp Pay was not the first mover because they had all this much larger company convincing every product manager issue going on. But there were smaller companies who said, we'll make the first apps.
What stops Cambridge Savings Bank from setting up UPI this afternoon?
Nothing. Nothing. By the way, UPI is offered by National Payment Corporation of India, which is a not-for-profit entity, set up, free to every central bank and every banking or government system in the world, if only you were to ask.
Just wanted to thank you for a really, really interesting presentation. And I took away, one of the key messages about how the role of the designers was to create the infrastructure and focus on the interoperability and to not solve the problem. I think what you said at the very beginning was very due emphasis. I have a question. If you could walk us through a little bit about who had the ownership of driving this forward, in particular, the ownership within different government agencies and the central bank. I've had a little bit of experience, and one of the frustrations that I was the governor of Pakistan Central Bank, was coordinating between the central bank, the relevant part in the Ministry of Finance, the database authority of the identity card, the telecom authority, and the tax authority.
Wow.
And they all have different, they all have different motivations. So I was interested at a very practical level.
Yeah.
Who had ownership to ultimately drive this forward, and who stepped in when something needed to be unblocked to keep momentum? Thank you.
Excellent question. I think it's extremely, by the way, is it being recorded still? Yes. Okay. All right. Okay. How to be politically correct then? Okay.
You want us to stop?
No, it's okay. I'll answer. That's fine. So I think coordination by design is flawed in the government. It doesn't work at all. Idea is to create least coordination. But by each of them doing one thing right. So we were trying to say identity project. Why should I even consult the identity authority if identity authorities their mandate is to offer identity verification under a rule, under the law of identity, right? Aadhar Act, we had a law under that you could do identity authentication, because I, as an identity holder, have the right to use my identity in authentication, and you, as an identity authority, have to, honor my right to use my identity. So we had to make sure that that came through independently. So identity authority was an independent authority under an independent law that created identity. And all they did was to offer an authentication service and an eKYC service. Stop it, right? Do nothing else. Then we had central bank who was driving unified payment interface. We have a National Payment Corporation of India, which is a clearinghouse, which is a not-for-profit entity that was driving the protocol conversation. Their idea was independent, completely independent, nothing to do with identity. They involved nobody other than the central bank and the banking system. And finance ministry in one sense, right? So finance ministry has they have interest to push some of this agenda. Even there, not all banks would join. That's an earlier question. So National Payment Corporation of India, when UPI was launched, it was completely voluntary, continue to be voluntary for banks to join. But we believe if you create the right growth opportunities and enough FOMO and impetus for everyone to eventually join in, they will join into the network sooner or later. So conversation never was to put everybody in room. Rule number 1, never put all of them in the room because you will never get any consensus. It's not even worth trying. But each of them have a care. So you have to understand each of their care. Where are you coming from and why are you opposing? And if you can understand this bilateral. So we did a lot of bilateral conversation individually. So, okay, that's a very good question. So, so in the case of identity authority, it was all just identity authority under the law that I was the chief architect, so we were all part of that program. Then UPI, when we launched, nothing to do with identity authority. UPI was launched by initiative under the NPCI, National Payment Corporation of India, which is our clearing house. They created initial workshops. They evangelized the idea. And I am an advisor and I'm an architect for that. So I'm an advisor to them, I personally, as an individual there. So we worked with the NPCI and the regulator, central bank, excited them about the possibility of 100 million merchants connected with 300 banks and 200 million, 300 million users, saying that this is because there was larger drive about digital India and digital payments. And there was a vision of the country, how as digital will push the country forward, we can't leave 80% of the country behind and only all of us have access to it. So the vision was very powerful enough to have this conversation. But in that conversation, we was NPCI, with me being there, Nandan Nilekani being there as advisors, but National Payment Corporation of India did that work. With data, it was very different set of people. So Kamya was all part of that. That conversation, the account aggregator is again a financial data network regulated by the central bank, where the central bank had put out a vision of how people could own their financial data to progress in their own life. And then we as individuals who are traditionally, I'm an advisor to many of them, work with them to say, how do you convert this into an architecture? How do you convert this into an implementable with minimal work? So we wrote what you call a data sharing protocol, quite like the payment protocol that moves payment, money from peer to peer in a secure and stable, accountable fashion. We designed a protocol for moving data from one end to other port, and then told the central bank saying that here is a technology architecture to meet your vision. And let's start working. It took 2 years, so 2 years at least to get to where we are, 2-3 years. And we are still very early. I think in the data network, we are still very early there. And the commerce network is completely different. There was an open source effort called Backend Protocol, I was talking to you about, where we were experimenting with the idea of a decentralized commerce network. And then Commerce Ministry, we had a joint secretary who was very forward-looking, who said, hey, you guys are onto something else. Can we talk about applying this for e-commerce, growing e-commerce beyond the sub 10%? How can we get everybody? So that was a Commerce Ministry discussion, and we set up a not-for-profit entity called ONDC, not by the government, by the private ecosystem. Like how MasterCard or Visa used to be. They were a not-for-profit entity in one sense, right, earlier. It's a cooperative in one sense, yeah. Not at all. Thankfully. Absolutely not. Yeah.
Good to see Pramod after 15 years.
See you, yeah.
If you had stayed in the US, we would have had central bank digital currency by now and would have had 10 or 100 Venmo-based systems.
I'm not sure. We were the missing point.
Yeah, you were the missing point. Pramod, you used to work in the Boston area before. So I have 2 questions. One is the account aggregator. One is that, data is the new oil. Is there any incentive where people can sell their data and make money? Right now, most of the money is made by Facebook, Google, where without even you participating. So is there incentive for people to sell at their own will certain data and make money? That will incentivize a lot of people.
Yeah.
The other question I have is also, when is CBDC coming to India?
Yeah, CBDC is live. By the way, CBDC is launched, so that's easy answer. We launched CBDC. We are on a pilot, CBDC pilot going on. We still don't know how it will work out. I think it is another option. India always believed in multiple options. We as individuals believe in multiple options. Not everything should be on UPI. Not everything should be on cash. Not everything on CBDC. Country needs resilience. And when something goes wrong, you need backup. So we need a lot of options for 1 billion people to participate. Let the choice be there. What works for what place? Cards, everything coexists for us. No big deal. On the first question, whether people can sell data, today, it's not clearly spelled out in the personal data. What is spelled out is the right to access and right to share. Right to sell is not explicitly lodged, but I would presume they would have. But I think there will be a fear around that because, again, vulnerability of people, lack of awareness of education, and so on with the people might also means that people, they will sell data without knowing the ripple effect or implications of their data. So I think we are not talking about data selling at this time. It's mostly about using the data to create economic benefits or economic access or better job access and so on. At this time, it's primarily limited to that. I think that conversation will come up in the future. Very surely it will come up, but there will be some discussion ought to have around. But the fact that I can own my own data and keep my data copy and share my copy would eventually means I can also donate or sell my anonymized data. I can donate it, clinical data, for example, healthcare anonymized. Good stuff can happen, bad stuff can happen. So we have to be watchful. And I think we are expecting a data protection authority to fall in play. We don't have a data protection authority has fallen in place yet. So it'll be a future conversation. So it's not, okay, everything I talked about has nothing to do with blockchain. Because again, as I was telling you, we don't go tech up, we go design down. And if it, for example, our commerce network, many entrepreneurs are using blockchain to exchange products, goods, and credentials. Sure, you can use that. Today, CBDC interoperates with UPI. It'll come in, it's confirmed already that is on the way. So we don't expect any interoperability issue to happen. Here, yeah, so it's not a blockchain decentralization. I'm talking about the architecture being decentralized. What does it mean? There's no central one authority, as you were saying. There's no one entity that is controlling the whole of India's digital stack. It's all federated, decentralized, different authority, payment authority under the Payment Settlement Act, identity under the identity law, and different people are under the Data Protection Act. So different people are playing different game, but interoperability being the key so that they can get like Lego blocks. They can be combined to create a lending offer of a $2 lending offer with no paperwork because you combine identity, bank accounts, data, underwriting algorithms, and some innovation, and you have a magic happening, right? So I think it's an independent combination that's happening. Otherwise, decentralization might mean architecture decentralization, data decentralization, authority decentralization. Nothing to do with tech decentralization.
There's no single distributed ledger.
No, not at all. I don't even believe it's going to work anyway. So, yeah.
Okay.
Yeah.
I have, thank you so much for the presentation, first of all. I have two questions. I used to go around in villages doing my field work before coming here. So I am more coming from like a side effect and like focusing on that. So what about, first of all, data security? I have had last mile bank official tell me that if you tell me an Aadhar number, he can tell me what bank I owe loan to, what scheme I have access to, what I don't. And secondly, relatedly, what are the side effects of, and I experienced some of this when I was going around digitizing in an economy which is like largely illiterate and also like especially financially illiterate. You don't know how much power your fingerprint has, and it can like clear out your bank account, which happened time and again, and it comes back to the trust question. A lot of rural population that's why like fears like digital payments, and even though they tend to benefit and like they will benefit the most out of it, they want to stay away because they have heard stories and many have had very bad experiences.
Yeah, so I think any such large scale transformation story has side effects. Absolutely. Security side effects, exclusion side effects, by the way. Because sometimes human beings harass human beings, not sometimes, it happens all the time, even in most educated institutions to least educated, underprivileged environment. Human power plays come in the picture. So an officer would say, I won't give you food, although you have the right to food. I won't give you the grains because you did not produce your ID card to me. Although the law says they cannot deny. So, but my power, I can deny, right? So exclusion, data security, and cyber or any other, what do you call, money or other security aspects, always a side effect. But we are asking more what's called a necessary condition. Not doing it. Not doing it, it simply means we are going to leave people in dark ages when the digital economy is growing. Top 10% like us are completely privileged, have access to everything. And 90% of the people have no access to it. So we are taking two independent steps. One, what are the necessary conditions that we must do? Point number one. Second, this is the same reason why UPI, when launched, was limited to 2,000 rupees. Not 100,000 rupees or 200,000 rupees as today. Today's limit is grown much more. You have the right to limit as well, by the way, as an individual. So there are a lot of regulatory governance that has came into picture and said, don't unleash it yet. Let's watch it. Let people feel comfortable about it. Let's create rubber-banded protection so that their whole bank account doesn't get wiped out. All this have already fallen in place. This is why we see 10x growth. The fact that 8 billion transactions happen is that people are starting to feel comfortable and people are starting to learn the tricks of the trade. But even then, the last question you asked about people getting cheated, about their PIN or fingerprint, it doesn't matter, it's nothing to do with fingerprint. My mom, if you talk to her enough, she would probably give you her PIN, okay? The sense that she would probably know you sound like a trustworthy person. Okay, she's sounding really nice. Maybe I should give it to her, bank details, because people are gullible. People are very, very gullible and easily trustable. This is where large-scale awareness campaigns are running, large-scale awareness campaign. But even then, we would believe there would be incidences, and then we have, by the way, the largest ODR, online dispute resolution, is live on UPI. So UPI comes on ODR. E-commerce is putting up an ODR. Now, judicial system is insisting that all this digital infrastructure must go along with an open online dispute resolution for things like I got cheated, can I get my money back, all those issues. But even then, you would see it. And the only hope I have personally is that we have a reasonable enough vibrant democracy with local foot supporters like you on the ground, civil society, people who are caring people on the ground who would speak out and bring it out and continue to plug the hole. And not doing it's not a choice, but we are doing it slowly with regulations, even there. Yeah, absolutely. You're right.
Thank you so much, Pramod and Kamya, for bringing this wonderful story to this institution. Would you also like to elaborate? Because something which I'm also proud about is not just this part of the leg, but the entire thinking of interoperable open systems now being leveraged in health, in education. And if you'd like to speak a little bit about that.
Yeah, that's, again, we title is financial inclusion. It's syllabus 1 hour. So, we can only tell so much of story. I think it was, again, goes back to the same principles. First, don't try to solve everything. Access to healthcare or access to education is a complex, multidimensionally complex problem. But what are the building blocks that are necessary? Like necessary, not sufficient, but necessary. By not doing it is the problem. So necessary condition can be achieved. Doesn't mean we will be healthy society. Does not mean we will be financially secure society. But not doing it, we are guaranteed not to be healthy. Okay, guaranteed. So we are looking at the necessary conditions here. Health, we are putting what's called a ABDM, which is a health stack, a full digital health infrastructure, where again, absolute privacy, decentralization was principles we applied. There is no single data records into single system that's bringing healthcare records together. These are all well laid out there. Education, we are doing same thing because people believe our young aspirational population is with 300 million people in the schooling system, which is population of a country roughly, right? Just students in the schooling system. You need, and continuously changing with GPT and all these things. We are seeing what does it even mean to be educated. We're starting to ask some basic questions. So I think we are looking at a long game, multi-decade journey, and saying what are the highways like we can do today that necessitates some ripple effect of law access, democratizing access, increasing trust, reducing cost. These are the three real key that we are always saying. Once we do that, we believe the entrepreneurial ecosystem will kick in to provide much wider access at a lower cost, cheaper, but high trust fashion.
Hello. Thanks, Pramod. Thank you. It was quite wonderful to look at the presentation. So I'm Pranav. I'm studying international development at the Kennedy School. And one of the questions I've been studying so far is, how can low and middle income countries also adopt a similar real-time payment system? And what can they learn from UPI's development and scaling? So you mentioned a lot about the technology factors, but I'm quite keen to understand and hear your thoughts on what were the institutional, regulatory, and let's say the political factors that led to the development of it, and what would, let's say, a low and middle income country would require to build that?
Wow, that's okay. So by the way, the many people would have fast payment is no more a unique story. Real-time payments are being done. Here also, I think the Bank of America and all has created some.
Right now,
earlier it was called something. Okay,
private
system that's happening, and Fed now obviously trying to create a more interoperable system. But Thailand has created a wonderful system, and Brazil PIX is much talked about. So Brazil has done a brilliant job, and also the scale is much more sharper than India's scale. They are 80% gone into very, very comfortable with doing in Brazil payments. Nuanced differences, but doesn't really matter. But they're all doing real-time payments. Many countries are exploring real-time payment. Is no more a should we have an infrastructure story. Everyone knows we must have a real-time payment system at a low cost, high volume system that can stay. What is the institutional structure? Again, I think the learning we can take away from India is this. Don't think systems and apps. Think protocols. I think very, very important that nobody thinks at that specification level, very low level specification, then create governance and incentives for the right adoption to happen and let the market innovation happen, right? So I think most people try to build very hard to imagine specification being, and politically it's hard. Politicians can't launch a spec to the people, right? I need to show off some app. Otherwise, what will I tell my constituents that I launched app for you, right? So we had to do things for launchability purposes, right? Political launch, we did a reference app. In the spec, imagine this you can do. Now you show this off, okay? But there will be many apps coming up. So we created a temporary Venmo and said, you can launch that. So you have to create a lot of these. You have to understand political care, bureaucratic and regulatory care, and market incentives. Like he was asking, big guys, incumbents won't join. So you have to really study that well and make sure they make them. But the cost of doing this and the time it takes to do is so little. It's just crazy cheap to do. But if you avoid a lot of multilateral conversation, you can do it even. That's why the Center for DPI, the cdpi.dev, where we are working. It's a philanthropic funded institution that we are offering free architecture design support for the countries who want to do it. So yeah, it should be fairly easy for them. Yeah.
I'll just add one point. I think many lower middle income countries have sort of come to us to ask, how do we actually take this forward? How do we accelerate? The point that we kind of make is there's probably two types of countries. One that's sort of a big swing country, one that says, I have nothing. I have no legacy payments infrastructure. I have no identity system that works digitally. I have no data sharing foundation. So there you have to have a high amount of political will, because you'll probably have to set up a new mandate, new institution, some budget, a big team, right? But most countries will actually not be in this big swing bucket. Most countries will be in sort of what Pramod frames as the +1 bucket, where you have a payment system, you have an identity system, you have some method of data sharing, you have some credentials. What are the changes, the +1 additions you can make to that system to help it operate as digital infrastructure and not just as some database that's sitting in your country, right? And so to frame that, usually you already have an existing set of institutions, and in every country, the institution that drives the system will be based on the quality of people at that institution. And it changes from country to country. You know, in India, our payments network was enabled by the central bank, but they felt a need to set up a separate institution that was run to kind of operate the payment system. In many countries, in Singapore, it's MAS, it's the central bank itself that runs the payments network. And so that's a function of, you know, the prioritization or the way people are set up. So that will sort of change, and it's programmable in some sense. As long as that technology, you know, infrastructure is open and it's at a protocol layer, the governance arrangements should be suited to the political context of who can, you know, run a mandate for that in the country, and it should be variable. So that's kind of some of our thinking on that.
Let's do one last question, please.
Hi. I have two last questions, actually. Yes, absolutely. They might require longer answers, though. Pramod, thank you so much for that insightful presentation. The first question I had was, you know, when I was looking at that chart of the number of identification numbers that, or rather enrollments that had happened, especially in the early years, I thought back to that time when we were getting messages day in and day out from our banks and from our phone companies saying that your line will be disconnected or your accounts will be frozen if you don't link this to Aadhar. And I was wondering about, you know, whether you had some thoughts on the role of a certain coercion that was coming out of sort of, you know, from up above. It was just there. And when you asked people, where is this coming from? They said, well, the boss has asked us to tell the customers to go do this. So it was bureaucratic in nature. And I wondered if you had thoughts about that. That was the first thing. The second thing is, this is a little naive question, but you said that a nonprofit or a philanthropy is essentially having conversations with countries about similar identification programs. Could you tell us a little more about that, please?
Yeah. So the first one was primarily the banking system, for example, was driven by income tax. I think we were really tightening as a country. We still believe 6% is low for we have a lot more people who earn money. So I think we believe the only way that the digitization gives that ability for genuine tax collection. And if you are a citizen of the country, you should be paying tax. So I think that banking system coercion was not coercion, it came primarily from income tax. And Supreme Court had allowed income tax to mandate Aadhar identity system. So that was very clear mandate for them to say, yeah, we are not tax compliant society. We ought to pay our taxes as per how we should be. If you want to see growth and if you want to see inclusive growth, we need to pay taxes. So they allowed this. That was the reason they were pushing for that. Telecom companies shouldn't have. I think that was a blip in between. They went back on it very quickly. And they said telecom companies shouldn't mandate. Any identity should have worked for them. So today, you would not see a telecom company asking for, unless you want to use it. They would use a video KYC on any ID, for example. Yeah, they digitized independently. Banking system came out of income tax. So that's the second question was about, okay, the ID system. It's not about not-for-profit. No, there are two independent things. One, many countries, as Kamya was saying, are already on a journey, especially Global South. If you watch, you will see large-scale inclusion is a big challenge for them. And inclusion requires identification. Inclusion requires bank account. Inclusion requires them to have some sort of access to that connection. So connectivity, bank account, identity, all becoming foundational rights in one sense, nature, and everybody is looking at it. So there is ID4D program of World Bank, for example, is funding. There are different programs that are funding ID projects. Many governments are implementing ID projects. We are not individually, some of us are not participating at all with any of this. They're all doing it independently. The last one I was talking about is that we have set up a center for DPI because I think there is a difference between digitization and DPI thinking. Digitization is where you write an RFP, try to digitize what you want to digitize, right? You get a vendor, sort of write your app and so on. We are saying, no, that doesn't give you the, what you call network, the multiplier effect. If you want multiplier effect, you have to create Lego blocks that can be used in ways like GPS thinking, the ways that you didn't imagine before. How do you unbundle your digitization problem into many Lego blocks? So we have set up a center for architecture and design support. That's also a philanthropic initiative. And we are engaging many of the countries who are anyway in the journey of digitization. We are telling them, while you are in that journey, what if you can extract out few Lego blocks that would create a lot more options for you in the future and create interoperability being the essence of all these things. Yeah.
There was one remote question, which I will just quickly repeat, though I think you kind of answered it, which was, what do you expect to get from a CBDC? And you mentioned it's another option. And I guess also you did eliminate high denomination currency notes. So presumably it's also
correct.
important from that
standpoint. That's true. So the CBDC, so CBDC, although CBDC was exactly equated to the physical currency. So the denominations of CBDC is equal to denominations physical. So we can't do cool stuff like fractional 0.001 rupee and so on. We probably need stable coins for that, but CBDC didn't do that. But nevertheless, it gives us an option. It gives us an option to print less and physically move cash. We are still a cash-rich society. So just another option at this time for us. Yeah.
Well, this was really terrific, fascinating, inspiring. There's so many adjectives I could use. I really appreciate the time you've spent with us and learning about all this. Thank you so much.
Thank you for taking time, and thank you for having me here. Thank you.